the first company that had earnings. Are you done with that, Mike?
Yep.
All right, you got anything else to say?
No.
All right, great. So let's get started, guys, with the earnings for Apple. Obviously, one of the biggest the biggest company on the planet, the first one to reach a market cap of $1 trillion, and they just had earnings. And it's interesting because they crushed it apparently, and they're also doing, Mike, guess what they're doing? What is the one thing I love? They're doing buybacks, and not a little bit either. They're doing buybacks, and they also increased that dividend as well. Guess by how much?
I think it was like 40% when I read it.
Well, dollar amount. I'm gonna blow your mind when when I show you that. Don't look it up. But let's take a look at, guys, Apple's earnings. So we got over here. Well, we don't have this updated yet, but the EPS normalized estimate was $1.43. EPS gap estimate $1.43. Revenue of $92.84 billion with how many revisions is that? What is that? 29? 29 revisions done entirely in the last 90 days. 18 of them to the downside, 11 of them to the upside. Now, what ended up actually happening was Apple GAAP EPS of $1.52 beats by 9 cents. Revenue of $94.84 billion beats by a whopping. That's in one quarter. That's in one quarter right there. That beat of $2 billion was in one damn quarter. That's insane. Raises dividend, absolutely love it, but I'm gonna tell you exactly like by how much, and announces a $90 billion buyback. You all know I love it. You all really know I love it. So let's jump into the actual earnings report. So like always, guys, actually I managed to put the links in the description right now on the live stream. So if you guys would like to follow along, then by all means you can. So yeah, we got, guys, Apple reports second quarter results. Yeah, their fiscal year ends funky. Their fiscal year ends in September. So it is technically their Q2. Anyways, we got over here. Apple today announced financial results for its financial 2023 second quarter ended April 1st. The company posted quarterly revenue of $94.8 billion, down 3% year over year. Look at that. So even though it beat on analyst estimates, it's still down 3% year over year, and quarterly earnings per diluted share of $1.52 unchanged year over year. So you have a neutral metric and a negative metric. You're pretty much going to the negative side. Okay? Just keep that in mind. We got a quote here from the CEO. Quote, "We are pleased to report an all-time record in service and a March quarter record for iPhone despite the challenging macroeconomic environment, and to have our installed base of active devices reach an all-time high," said Tim Cook, Apple CEO. "We continue to invest for the long term and lead with our values, including making major progress towards building carbon-neutral products and supply chains by 2030. And I believe that the next paragraph, it is the CFO. Quote, "Our year-over-year business performance improved compared to the December quarter, and we generated strong operating cash flow." Love it. Strong operating cash flow of $28.6 billion while returning over $23 billion to shareholders during the quarter, said Luca Maestri, I don't really know how to say that name, Apple CFO. Quote, "Given our confidence in Apple's future and the value we see in our stock, our board has authorized an additional $90 billion for share repurchases." Bro, that's insane. Look at that cash flow, Mike. That cash flow was just in 1 year. Oh, sorry, not 1 year. 1 quarter. That was just one quarter.
Just everything's perfect. Like literally.
Well, I wouldn't say everything is perfect because it did go down. The revenue did go down by 3% year over year.
Correct.
So
but also it's against expectations also.
Right. Also, you know, the Christmas season's over. You expect people to buy less stuff. So it's all, I guess, within speculation, right? Yeah, and on top of that, dude, an additional $90 billion every share repurchases. The problem with this is the fact that, well, we're going to take a look at why I hope that they do this strategically, because when I show you their share price, you're going to be like, what in the world? What did Rich say? Let's see. Do you guys know what percentage of iPhones are made in China? No, we do not, Rich. Mike, can you look that up if possible?
Sure.
All right, thank you. And I'm going to just keep going on with this. I don't think there really is anything more in addition to this. We got Apple's board of directors has declared a cash dividend of 24 cents per share of the company's common stock, an increase of 4%. The dividend is payable on March 18th to shareholders of record as of close of business on May 15th, May 2023. The board of directors has also authorized an additional program to repurchase $90 billion of stock. Okay, great. All of that sounding really solid. Now, let's take a look at their financial consolidated statements. Because at the end of the day, this is something that, you know, we can see the overall arcing opinions when it comes to what the CEO thinks. But I also want to take a look at what it was compared to a year ago on the 3-month ended. Do you have anything?
98%.
98% of iPhones are made in China. Yeah, that's a problem. That's a little bit of an issue. That's a little bit of an issue with the whole, Taiwan situation that's currently happening. So, yeah, that's a little bit of an issue. But, oh well, it is what it is. At the end of the day, there literally is no such thing as moral investing, right? The moral investing is the line that you set in for yourself. That really is at the end of the day, right? Because you can find negative things when it comes to every single company. So it is what it is. But let's take a look at this consolidated statements, guys. We got over here total net sales in April 1st, 2023. Actually, sorry. March 26, 2022. Let's bring this. Yeah, that is bad. Exactly, Rich. March 26, 2022. Total net sales $97.3 billion. April 1st, 2023, 94. So that was a decrease around $3 billion. So there's that decrease. When it comes to the gross margin, we can see it went from 42.56 down to 40. Well, yeah, down to essentially $42 billion. And let's see, net income. Right here, we got the net income, $25 billion in March. Well, let's just say Q2 of 20. Q2 of 2022. And that's just weird to say because their Q2 is different. But you guys get what I'm saying. March 26, 2022. They did $25 billion in net income, and in April 1st, 2023, 24.16. That's another decrease. Oof, that's really bad. Actually, Rich, here we go. Net sales reportable by segment. If anybody's interested in this one, we can see that actually Europe was the lead. Look at that. No, sorry, America was the lead. I got confused because it was a little bit pushed. No, but America was the lead, still leading, by the way. However, has gone down since the prior year, going from 41 billion down to 38 billion. Europe is next, going from, actually Europe went up actually. Look at that, 23.3 up to $24 billion. Greater China, okay, it is 18 billion down to 17.8 billion. Japan down 7.7 down to 7.17. And the rest of Asia Pacific went up 7 billion up to $8 billion. You can see that the total of net, well, we already saw the total of net sales, but yeah, guys, that's absolutely amazing. And you can still see that iPhone is still leading the pack. It doesn't even come close. Look at this, man. Mike, are you seeing these numbers right now?
Yep.
Look at the iPhone sales compared to everything else.
Well, it's their core product.
It is their core product.
They base their basic business on.
Yeah, so it's not really surprising in the slightest. But all right, so let's head into now the calculator. Are you ready for this, Mike?
Yep.
All right, so let's discuss some numbers. We got ticker for AAPL, market cap of, you want to say it?
$2.623 trillion.
$2.6 trillion. The first company to ever reach $1 trillion, guys. And I believe the second one was Microsoft, and I believe the third one was Amazon. But that's insane.
It's going to be the first company to reach 3 trillion.
Oh no, dude, this was a lot higher. Actually, no. What am I saying? I am so sorry. I keep thinking that this thing is still at a much cheaper price. Sorry. Current share price of $165.79 with a PE of a whopping $28.17. Guys, this thing has gone for a complete ride within the past few months. Like, I remember just last year, and not even how can I say this? Not even that early in 2022. I'm talking about like late 2022. This thing was at a really, really cheap price, guys. I mean, on the 1 year, this thing is still down, 0.14, which isn't anything. Year to date, look at that graph. It's not even hyperbolic either. It's like very linear. What do you think?
I agree.
All right. Yeah, but as you can clearly see, guys, the graph is up 32.5%, more than 32.5% on the year to date. Now, looking at this on the 5 year, look at this. Just as of December 2022, so December 30th, this thing was as low as around like 126. In fact, 52-week low, it is $124.17. So, you did have a pretty good buy-in. Well, you had a pretty low buy-in point just a few months ago, right? So that's interesting to say the least. Now, after these earnings came out, how'd you think you probably already saw it, but
Yeah, it went up.
yeah, it went up by 2.3%. I personally don't understand why it's going up by that much. Okay, I'm not saying that it shouldn't go up. They did have pretty good earnings, and on top of that, well, I would say decent earnings, and on top of that, massive share buyback, right? An insane amount of share buyback and increase in the dividends. But is that worth, 2.33% post market? I don't think so.
To me, I would actually expect it to go up higher because of
Really?
how, because you have the hopium crowd that's basically saying, tech company, look at Microsoft. Microsoft's earnings weren't as spectacular as this and went up 10%. So Apple not doing the same indicates maybe a weakening in that sentiment of stocks only go up. Because remember, that's what bolstered a lot of these companies, and this is post Powell.
Yep.
So Powell came out, crushed the sentiment, and now you're just seeing the cracks.
Also, they never said AI.
They did.
They did in the earnings report.
They said that Tim Cook said that they were going to be looking to integrate AI into their products thoughtfully. I believe that was one of the quotes I saw.
In the earnings report.
Yep. Or the press conference.
Okay. Because I'm like, I just read the earnings report. There was nothing that said AI. Okay, if it was in the press conference, then that's a complete different story. But yeah. Nonetheless, guys, this thing is up a massive amount, and I guess you're right. This thing, it's a tech company. Apparently, that is the safest sector to be right now, which is completely ridiculous. Now, they do pay out a dividend of 92 cents per year per share. So, okay, I said that they increase the dividend, right? That was a question for you.
Yes.
Okay, great. Say that. Do you know by how much they increase it by?
I know it was a crazy percentage.
Great. Dollar-wise.
No idea.
Let me see. Does it have it here? No. Hang on. They don't have it here. I thought I read it though. That sucks. But yeah, it was about a penny. That's literally it. They raised it by around like a penny. Yeah. An increase of 4%. Why don't they have it? Yeah, but for some reason they don't have it higher. Maybe it wasn't a penny actually. Maybe I'm getting that confused. But where did I see that they raised it by a penny? Hang on a minute. Did I? Oh man. Oh wait. Right here. Sorry. I did have this pulled up. Apple raised the dividend by 4.3%, 24 cents plans, $90 billion stock buyback. Apple declares 24 cents per share dividend, 4.3 increase from the prior 23 cents. One cent I heard. Yeah, there it is, Dave. Yeah, I got it. I am so sorry. That's 1 penny. We're almost at a quarter, guys. Apple's almost paying a quarter per share. Oh, God. All right. So, nonetheless, though, this dividend is still really safe overall. Apple is not a company, guys, that you buy for its dividend. You really, really don't. Now, their payout, look at this yield, 0.55%. Payout ratio of 15.45, a 5-year CAGR of almost 8, 9 consecutive years of dividend payment. Ex-dividend date passed as of May 10th. Payout date was on the 16th of February, and they pay their dividends quarterly. So they're a company that pays out on the months of, I believe, February, May, what's the next one? August and November. So it's pretty rare for a company to actually have earnings on these days, but an increase of 1 cent, guys, is not a lot. But here's the thing, 92 cents based off the current shares outstanding. This means that they pay out $14.57 billion with only 92 cents per year. That's insane. After this is paid, in regards to their average 5-year free cash flow, Mike, look at that. Look at how much cash flow there's still left after that's paid.
Jeez, even
65.
So they don't.
Yeah, 65.58. And look at the last year's free cash flow after it's paid. After that 14.5 billion, almost $100 billion.
And they had buybacks the last year.
Yep. Look at these payout ratios in regards to the cash flow. So this is what I mean is that Apple's not the company you buy for its dividend. Apple's a company you buy for its dividend CAGR. Kind of. 7% is still pretty good. But it's just the fact that it's Apple, right? Massive amount of free cash flow. You buy for growth, and right, you buy because of the cash flow. That cash flow is insane. So with that said, let's jump into now their fundamentals, shall we? I do need to get rid of this, but nonetheless, we got net income, guys. 5 years ago of $59.5 billion, 1 year ago of $99.8 billion, increase of 68%. What do you think about this graph?
I like it. Heading into COVID, you obviously had the decrease. However, year 4, you also had to decrease. So it is what it is, but also the 2 and the 1 year basically reestablishing the trend.
I would say the 1 year reestablishing the 2 year trend.
Yeah. So you're basically on an upward trajectory.
But how much of that? But how much of that though is attributed to inflation?
Right? Most likely, right? Because you're going to basically create higher good prices.
Right.
So obviously they're going to have higher.
Exactly. But it still counts though. It still counts. You have to take it as it's still a win. So
I'm going to say 80 just because I don't like the 4 year. 3 years explainable, but 4 year just gives me a little bit of pause.
Okay. No, that works. That works. By the way, shout out to the 12 lads and also lad ads. I don't really know how to say the girl version, but shout out to the 13 of you now. Thank you so much for watching, everybody. All right, let's go into, make sure to like, subscribe, comment, guys. It really does help. Let's go now into the free cash flow. Now, we just saw the 5-year average free cash flow. It was insane, and the last year's free cash flow was even more insane. Now, this is without them. This is essentially without them paying out that dividend, so it isn't full. We got 5 years ago of $64 billion to 1 year ago of $111.44 billion, increase of 74% with an average of $80.15 billion. What do you think?
I was going to say 90 to 85, just because the 4 year, again, kind of meh, but it's still good. And the overarching trend is very good.
Right. So what'd you say again? 85 or 90?
85.
85. All right. 85 it is. 85 it is. Now, the revenue is probably going to be amazing. Let's check this out. We got 5 years ago of $265.6 billion to 1 year ago. Oh, dear Lord. $394.3 billion. That is an increase of almost 50%. 48.47 to be exact. What would you give this as a grade?
90.
90? Yeah. Yeah. Pretty much the same reasons, right?
Pretty much.
All right. Now, here's something that really took me off guard when every single time I see Apple. You would expect that their assets and liabilities are good, yet look at this downturn when it comes to their assets and liabilities. I mean, you got $107.15 billion all the way down to 56.
That's insane.
Yeah.
Why wouldn't you be taking that money and paying off your liabilities?
With that amount of free cash flow, I'll tell you why. Because they're probably using it to grow the company. They're probably putting it into like innovation. They're probably because free cash flow, you could do several things with it. You could buy back shares, pay out the dividend. You could make acquisitions, pay down debt, and grow, right? So I think Apple's mainly putting that money into the growth part of it, which is fair, right? Which is fair.
Yep.
So we got average total assets of $342.6 billion. Average liabilities is $277.32 billion. There's only a difference of $65 billion. So what would you give this a grade?
I don't like it because it's decreasing to start off with.
Well, so let's see exactly why it's decreasing. So I'm gonna come here to the financials, and let's go to the balance sheet. And if we scroll down to that total assets, we can see that it's 365, 338, 323, 351, 352. Okay, now liabilities wise, we can see that it's also kind of remaining stagnant, though we do see a pretty big jump from, actually we see a pretty big jump in almost every single year.
Would if I have to pay more on more interest on a liability, would that affect the cost of liability, or would it be, are they basically saying how much that liability is like net worth?
I believe this is net worth.
Okay.
Yeah, because you got over here long-term debt. That's mainly the one that I really want to take a look at. Pretty much everything else like unearned revenue, non-current, deference tax, capital leases, other non-current liabilities. All of that just sums up to the total liability. So it's pretty much just all kind of roughly the same, honestly. Like it's decreasing, but you can see that the decrease is, I don't really know where to put it, honestly. It's interesting to say the least.
50?
I would argue, yeah, I would argue you have a decrease more in the assets than
You
in
got
the
good and
liabilities.
bad. You honestly got good and bad. Like you're
Yeah.
saying, Apple could be growing the company. You're seeing it kind of on the results of the earnings, but the thing is, you can. I'd rather have a company kind of like you see how it's starting to curve back up, possibly.
Right here. Yep, right here.
I'm like, okay, let's see that continue, and then maybe
Right.
the gray gets better, in my opinion.
Right. All right, looking now at the cash flow minus liabilities. So even though the assets minus liabilities is decreasing, look at this cash flow minus liabilities. I can hear myself, by the way, in the echo again. Look at this cash flow minus the liabilities. Their cash flow is increasing at such an insane rate that it's keeping essentially the liabilities at bay. Like this thing is flat. The line's flat. The line is
actually that's interesting to me because you have it where like you saw the previous graph and you're not expecting this type of graph.
right.
So it's almost good in a sense, but it's bad, but it's good at the same time because like
Also, take a
to
look
me-
at this. Yeah, go on. Yeah.
yeah, like the like you have free cash flow increasing, but you have the liabilities, which in my opinion is easier to turn around if you want to pay those, but also Apple is basically a growth stock. Like that's something expected out of a growth stock. So you almost have to
It's not
give it a better
necessarily a growth stock, right? But it's a company that's tried and true that for some reason keeps beating expectations every single year. People thought that Apple was going to die out or at least run out of ideas. I wouldn't say die out, but run out of ideas like 10 years ago or something like that. And they're still beating every single time. Like it's absolutely
also
insanity.
you got a little bit of a cult of the investors.
I would say you have a little bit of a cult of the customers.
I think most of their customers are also investors.
I agree with that one. But to also take a look at this free cash flow, man. The 1 year ago free cash flow, it is 111 billion. Just looking at this, right? After you do cash flow minus the liabilities on this 1 year, pretty much if you assume that they make the same free cash flow, 111 billion, they could take away that 190 billion in the next 2 years.
Yeah, which is pretty insane.
That's pretty good. Like if you can cover all your liabilities in the next 2 years, it's pretty amazing. And even as of 1 year ago, it's lower at negative $190.64 billion, lower than the average by like around $200 million or so. So how would you give this a grade?
I want to say 65 to 70 just because I can't give it a higher grade because, well, one, it's negative,
flat,
but it's
yeah.
also an explainable negative.
Right. And now looking at the shares outstanding. Guys, I mean, this is not surprising in the
100.
slightest.
Wait, let's just skip the explanation. It's
I mean, I
100
kind
at the
of
end
can't
the
though.
story.
It's part of everything. But guys, look at this: 19 billion shares outstanding, down to 15.8 billion shares outstanding, and they're buying more. They're buying $90 billion this year, or at least within the next couple of years. That's crazy. So yeah, look at that decrease: 16.71% on the 5 year, and almost 2/3% from the previous year to the current year. You can see that it's almost every single year 2/3% being bought back. That's amazing, right? So 100%, I agree with it. And lastly, cash and equivalents, they currently hold $20 billion, well, $20.5 billion, with an average of $32 billion. Looking at the overall grades, gave them the income 80%, free cash flow 85%, revenue 90%, assets minus liabilities 50%, cash flow minus liabilities 65%, shares outstanding of 100%, overall grade of 82%. It's funny how this company actually did a little bit worse than Microsoft, even though Apple is like the biggest company on the planet. Interesting, isn't it?
Yep.
The main problem is this assets minus the liabilities, though. The profit metrics are very good, right? Very, very good. But assets minus liabilities is a problem. And if you fix the liabilities, you also fix the cash flow minus the liabilities. All right, so now time to see what price we should pay for this company. And here's the one that gets people every single time. Because guys, the whole purpose is not to overpay for growth. That's literally it. I get Apple's a great company. I get that. I own a little bit of Apple, even though hesitantly I own it. At the end of the day, guys, you don't want to overpay for growth. Warren Buffett, let's just start off with this. Warren Buffett doesn't buy Apple above, I believe, like 135. At least from what I've heard through the grapevine. I don't know if you can, agree with that sentiment or not.
I think it's actually been shown because like how he's buying Apple and high stake in the company, he has to report it out, and
Right.
you can basically see what he's buying it at.
Well, no, you saw how much he bought of it, but you don't know what price he bought it at. You get
Yeah,
me?
but you can kind of estimate based
Yeah,
on
you
like,
can based on like you can
because he has to
yeah.
report it within a certain range, so therefore you can estimate between here and there, and you can reverse engineer it.
Right. So guys, from what we've heard, Warren Buffett doesn't pay over $135 for Apple. Look at the target share price adjusting for debt. 134. Huh. That's fairly close, isn't it? And then not adjusting for debt is $66. So a lot of people are like, whoa, that's a big drop. But nonetheless, let's see, inputting some revenue growth and predicted share buyback, what do we get? So Mike, growth assumption for the revenue, it is 4.44% according to Seeking Alpha. Okay? Let me put this into perspective. Year over year, okay? Year over year, they fell 3%. So pretty close, right? Down 3%. Actually, it's not pretty close at all. Sorry. It's down 3%. And then analysts are saying up 4%. So give me some revenues.
-3. So let's say they continue that.
Really? Really? -3. Okay. That's a first. Okay.
Then +3.
Oh, wow. So that's an increase of 6.
And then a 9 to match near the sector.
I would not have done that.
Hey,
is that really the sector? Is that really okay? Yeah, 7. Oh, sorry, 10.5. Yeah, yeah. I personally have never put in a negative value when it comes or a negative revenue when it comes to Apple. I really haven't.
Let's take a look.
Let's take a look. Let's take a look. This is not mine. This is you. This is from somebody who doesn't know. Well, you know a little bit more now, but who doesn't delve in fundamentals.
It's not their forte.
Right. It's not their forte. So, what would you say for the predicted share buyback?
So they had 16% for the 5 years. So you're basically gonna assume, and they've historically bought back more. So we can do.
And they're
like
buying back
15,
this year as well.
Yeah, buy back 15, buy back 20, and let's do buy back 25.
Dear Lord, you mean for the lowest assumption, you want to buy back 15?
Yeah.
Wow, dude. Okay, I'm gonna give you guys what I would have put in afterwards, but that's maybe close. Okay, she said 15 and then 20 and then 25. Dear Lord. All right, well, with this, guys, we get the target share prices of $69.41, nice, up to $117.72. Now, adjusting for debt, $140.33 to $237. Dear Lord, Mike. Dear Lord. So,
hey, that's what I thought. So,
again, listen, man, it's you.
Do this.
Every investment is the present value of all future cash flow, and this is not financial advice. You guys are seeing his, and in just 1 second, you're about to see mine. So, with this, with these assumptions, guys, margin of safety of 5, 10, and 15, we get low of $119.28 to $225. So, at the current price of a 165, and as of today, they're as a pre-market, as a post-market, they're up to 169, so almost 170. Yeah, we're pretty much under the median assumption. You know, I normally like to buy anything close to the median assumption. So that's, yeah, you know, we're between the median and as well as the median and the low assumption. And for some reason, we're losing, YouTube's not receiving enough video to maintain smooth streaming. Oh, well, that's a little bit concerning. Oh well.
What's happening?
Error. YouTube is not receiving enough video to maintain smooth streaming. Well, hopefully it's not going to be a big deal since we're not really running anything major. You know, we're not running like PC gaming or anything like that, so hopefully it should be fine. But yeah, guys, I mean, this is pretty much telling us that according to him, between the low and the median assumption, adjusting for debt, it's a pretty decent buy. Now, for me, I personally would have not done 3%, or sorry, -3%. I would have done something along the lines of like 2, 3, and 4%. And for the predicted share buyback, I personally would have done this. So on the 5 years, they have done around 16, right? I'm going to assume that in the next 5 years, they're going to do similar, but they're not going to reach. I'm going to be conservative about this, right? I think that they're going to do similar to 16, but not quite reach it. So for the highest assumption, let's go with 15. For the lowest, let's go down to 12. And for the for the median, let's go down to 12. And for the lowest, let's go down to 9. That would have been mine. So with mine, it's $78.08 to $89.15, not adjusting for debt. And then $157.58 to $179.82. With the margin of safety of 5, 10, 15, $134 to $171. So there you go. It's a pretty big difference. Don't you think?
I agree.
Yeah.
But to each their own.
Yeah, to each their own. And like, right now when you do the technicals, I'm pretty certain that you're going to get some different numbers. Technicals will tell you something else, right?
Yeah.
So, guys, at the end of the day, this is why I actually really do enjoy that we have two different looks when it comes to what prices we should pay for a company, right? Because even Warren Buffett and Charlie Munger, that you give them the same company and they'll give you two different numbers and different reasons. Yep. So, guys, every investment is the present value of all future cash flow, not financial advice. You guys can read all of the earnings reports. Link is in the description below, and all these calculators are available for free. Now, let's jump into this dividend, because even though 92 cents is not a lot, putting in $5,725, guys, this nets to an annual dividend of $31.77. Apple is not a company you buy for its dividend. End of story. Right? You buy it because it's Apple. You buy it because aftermarket, this thing just rose a whopping 2.5%, right? That's the reason why you buy Apple. So, not for a dividend. Nonetheless, though, that's essentially what you would get for $5,725. So, with that said, Mike, tell us what the technicals say.
All right. So, basically, diving into technicals, Apple right now, after market's trading around $169. If we go into the after hours trading show, it's $169.75.
Nice.
Just keep that dollar in mind for it. Here's my concern. You made a higher high, and now you're making a higher low. However, you're now basically, unless you close higher than the $72 mark, you're going to be making a lower high and then progressively possibly leading to a lower low. So it's just something to keep in mind. Apple's had a basically massive staircase up. It's one of the biggest weightings. It is the biggest weighting in the S&P and the NASDAQ, so it has the ability to basically move the market significantly. If we look at the weekly graph, based on if Apple were to close today, you basically would get a failed breakout, but also not a breakdown. You are below the two-week look back high of the candle, which is sitting on the high of $168.16. So until you break above that level, which you are now in after hours. Now we have to see what Apple closes, especially, guys, remember, Apple is basically a huge chunk in the market. Market affects it. You have ADP non-farm payrolls coming out tomorrow, and all the payroll numbers, so they can affect Apple in a negative way if the whole market basically goes down. With it, you're going to see Apple do the same. So keep that in mind. Now, Apple already had a bearish intonation going into earnings on the weekly. Has the ability to curl up, but I'm not basically going to assume that, because your RSI on the weekly would be extremely overbought and basically ready for a pullback. On top of, you most likely would bang your head into this reversal zone here, which would be sitting near all-time highs, but not necessarily there. The daily is sitting very, very close to a reversal zone, and the MACD was getting ready to basically go to the downside into earnings. Now, again, it hasn't actually crossed. So, this is one of the situations that you're wanting to basically be cautious about of where you go with it. So overall, if you basically break the MACD here, it can go down. If Apple basically sells off or fades the gap downwards, you have to see how it goes. But otherwise, it's basically looking like there is a possibility for continuation to the upside. If you fade the gap, then you look for more downside. If you go up, I say basically 174, 175 is probably where you're going to top out at. I wouldn't be pushing Apple any much higher, especially with the state of the economy and all these other things are going to influence it. You're going to be very near a localized high at $175.76, and basically all-time high for Apple is about 181.62. So again, I don't think you get all the way up there, and their earnings really not seeing the reaction that would generate that to the upside. So we just have to be careful with that. You do have a MACD divergence on the daily. As you can clearly see here, MACD is making lower lows as price is making higher highs. So again, with this, it could literally bang its head here, get rejected, and fade the gap down lower today, especially because it's an earnings gap. It could fade that gap opening higher. You always have to be cautious, or it could just have a doji candle on the daily. So taking everything into account, would I be buying Apple at these prices? No. Now the famous question is, well, okay, if you weren't going to buy Apple there, where would you consider buying it? At me, for minimum $146, and if I was really stretching it, I would say sub 130, similar to how Warren Buffett, I'd be targeting the 122 level, or even the 106, or the 122 or 113 level is about where I'd be targeting it. The MACD just really looks ugly on the weekly for me, and that's why I'm not going to invest in it, because I see more downside potential, and seeing what all these banking sector things that are going on, it's going to affect tech. When it affects tech, Apple's the most resilient. When Apple starts falling, everyone's going to panic sell, and that volume capitulation is I do not want to participate in. If you want to buy Apple, wait for that volume capitulation to occur. All
right. So, yeah, I think that, yeah, I mean, I personally think Apple is a solid company. I don't know why I pressed learn more on that one. I think Apple is a solid company, and as you said, when Apple begins to fall, when people give up on Apple, that's when you know you've hit rock bottom. That's when we really know you've hit rock bottom. So
yeah, when you get the volume capitulation, that's when you buy.
Agreed. So guys, I think that would pretty much do it for this stock analysis on Apple. So yeah, with that said, guys, liked if you like, comment, subscribe. Really does help with the algorithm on YouTube. Y'all can follow us on the new tech sites. Link is in the description below.